Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Monday, and we're at the 28th of April, 2025. And boy, when we're looking at these markets and what they're going to do, what an interesting night it is. So as I'm looking at the evening, I see start. I see a market that doesn't get new news in the stock indices, yet they keep trying to come back and rally. Obviously, the market is screaming that if trade deals were to happen, this market wants to go higher. If you look at earnings, they're not so bad. There's a general beat in the market. That's not a terrible thing to see. But remember, we haven't seen the worst of the tariffs. You know that you just saw that China and Temu have gone, and those are the big, I don't know if you've bought anything from them, but I have. And I bought a lot of pet supplies. And by the way, the quality's been wonderful. My cats like the houses that we bought and things of that nature. And they're a fraction of what they would cost in the United States. And they last. I have to give you that. I've been happy with some of the products that I bought from. Admittedly, it's mostly for my pets and so on, but I have a lot of pets. So as we look around what's going on, their prices have gone up. And in many cases now, you'll have an item that, for example, you might have a bill that's $25, but your tariff's $27. And that's going to go up even more because very shortly it kicks in that I think they're going to have a minimum mailing fee or some type of tariff that is called for $100 on these packages. The de minimis part is gone, where anything under $800 was tariff-free. That's out the window. And I haven't seen that China and the U.S. are reaching for each other. We saw today Scott Bessent was out, the Treasury Secretary, on CNBC, and he's waiting for China to call him. It's going to be a long wait, Scott. We're the ones that started the tariff war. And the rationale, well, they were overcharging or undercharging and dumping. We started the tariff war. Pick up the phone, deal with your counterpart. Hey, you know what we did, you know why we did it, let's talk how we can make this better. Does it really matter who calls who first? I don't think one vote in America is going to care. I think the people would care that they're talking, and I don't believe anyone's talking. And the problem is, maybe that's the reason nothing's happening. Maybe there's really nothing to talk about. In the gold, a little bit of a correction back down. But, you know, each time this market's getting down to 3,300, it's getting well bid. I think you're seeing that. In the dollar, if this dollar can't consolidate here and start holding, I'd get very nervous. I think it can go under 90 if things go bad here. And I think that's what it's waiting on. It's not getting any piece of news. I've been looking at what the foreign currencies are doing, and as a group, they've rallied nicely against the dollar. In the energy market, if you crack $60 in the crude oil, you have a problem. U.S. producers will cut back production. They certainly aren't going to drill new wells. They're not going to spend money to expand the products. That's what I see. In the natural gas, you lost the bearish embedded reading, but that doesn't mean there's very far to go up. So it's something we have to watch, and we'll cover that now. So as we look at a close-only chart of the market, you're staying under the 18-day average of closes. You've bounced nicely from the recent low, but it's a bear market bounce so far, in my opinion. You can see where the April 7th low was, and it was caused by a combination, of course, of the tariff news, but more about the bond market for a moment having frozen. And that kicked yields way up. Since then, the market has done better, and it's come back up here. But you haven't taken out where this break began from, which was over the 5,800 level. That's 300 points away. I don't know. When I look at how the rally's gone, the pattern is bullish in the short term, higher lows, higher highs. The market has held and gotten over the 18-day average of closes, so the bias is up, the trend is up. Where could resistance be? The Bollinger Band, and that number is 56.73. Where's support here? Back down at 53.55 as I look at it. We're overbought at the same time. You have a very similar picture with the low in the NASDAQ. We've had a rally. The resistance is this upper Bollinger Band, supports around the 1852 level or so. In the Dow, a similar pattern. These three are like all together, as is the Russell here. So all of the stock indices have come away from their August 7th to 9th lows. The Russell was a little late, took 2 days for it to make a lower low, but the others haven't. And the big question is, was that the low? And I think you can flip a coin on that. I think that if a trade deal gets done soon, as Scott Bessent said today, we could be a week or two away from the first deal. I don't care if it's a letter of understanding, a memorandum of understanding. Either one works for me. And if that were the case, I don't think you revisit that. If it's not the case and we keep dragging on, I think the market's going to look at that 2-week period and not be friendly. What else do we have this week? Well, you got the PCE index coming out on Wednesday. You've got the U.S. jobs report. Tomorrow, what do we have? Let's take a look at this and see if you see where we're at. You got Red Book sales coming out at 755. The Case-Shiller index, you'll find out if home prices are staying up or they're coming down. They're unaffordable with high mortgages and so on for most people, especially new-time buyers. The Conference Board U.S. Consumer Confidence Index, that's going to come out at 9 o'clock in the morning. We're getting the JOLTS report, and that's going to be an important report, labor turnover as well. And that comes out at for March, that comes out, boy, that was funny, at 9 o'clock a.m. Central Time. I looked at that and I said it comes out 2025. I don't know what I'm thinking. The API numbers are going to come out for where the energy stocks are at 3:30 in the afternoon. So let's continue on with the charts and get a picture as to where the rest is. On the DAX, you do remember we had this outside day. And I said when you take out the high of an outside day, if you do that in the first 2 trading sessions afterwards, be careful. It's a trap. It's a bear trap. And often the market makes a run to either the closest moving average above it, which we don't have them, or the upper Bollinger Band, which is exactly what it's doing right now. It doesn't have to hit it. You've had a big move already. So it's lived up to what I teach in that. In the 10-year notes, you're back in an uptrend. You're overbought. Similar to the stocks, you've gone through a lot of buying power, not overbought, to get the market off its lows. Is there anywhere it can go from here is the big question. Now, we're trying to get over these highs now in the 2-year note, and if we can do that, get a little friendlier in the market. But again, the 2-year we know is impacted by the Fed. We know that the further back you go in the curve yield, that is not the case. In the dollar index, we're in a consolidation phase. Now, you had a bearish embedded reading that you lost. You've had an attempt at a rally, which is to be expected. If the market's going to stay true to form, it should not take out this low before price and the 18-day average come together. This is not something you buy for that. This is something you don't go short until you know which way it's going to go. Do you understand the difference? So it's not a matter of writing me, well, Ira, you said the dollar would go up. That's not what I'm saying. The odds favor the two are going to come together. But because you're under it, your bias is to the downside in the market. The eurocurrency is the flip-flop. Or is it? Well, you never really did embed here. So this market's correcting an overbought condition, and because the dollar's dropping, it's staying strong. Again, 57% of the weighting of the dollar index is the euro currency. Then we get to the British pound, which is just plain strong. The market's making new highs for the whole move. I mean, you could be going towards the 136 level here. It wins by default against the dollar with its policies. Bitcoin has come alive. It's got an embedded reading in the May contract. I contend that this market gets bought by the pros now, and they're still looking for that, I said, towards the 100,000 level. I haven't changed my opinion. On the energies, they're looking more bearish, but here's what's really going on. Notice how you're caving in at the top Bollinger Band and you're coming down. Volatility's coming out of the market. And so the arms of the Bollinger Band collapses on it. And where's it happening? Right at the 18-day average of closes. So the question is, what next for this market? At this point, the swing line is down, the trend is down, the bias is down, and momentum is overbought. It's easier, as I see it, to go down than up in the market, and I think you get the breaks if you go up to 68.11, but I don't see why it would want to go there. Then you look at the June WTI crude, it's the same picture. Notice how you're collapsing in the Bollinger Bands. I have a bearish bias in this market. In the Rebob gasoline, no. Spring, summer driving, I give the market the benefit of the doubt that it's going to try to give you more of a rally. It's way too overbought, as I see it, that to step in and buy the market. Plus, it's got those Bollinger Bands coming at it. But I always think of the summer driving in the market, although the Trump administration today said that they've approved E15 fuel. So they're trying to lower the price of the market by using some of the corn and other ethanol products that we can get. And in the nat gas, as I said, you lost the bearish reading. At a minimum, I expect price in the 200-day average at 337.50 to hit maybe as high as the 350 area, the 18-day average. Lots of countries are talking to the U.S. about liquid nitrified gas as one of the items they want to pick up increases of to trade deficit down. So this is very much in play as our agriculture, especially our grain market. So those are things you want to take a look at. We talk about this and a lot more in our free offerings, my newsletter, the Linn letter, special reports, your weekend editions of these, our price counts. There's just a host of things. Just simply go to iraepstein.com, free offers. Can't beat it. It's on the top left. You'll see free offers. Give it a click. You choose from the board here which ones you want. Then at the very bottom, you put in your name, your email address, and we get everything out to you. Can't be easier. iraepstein.com, free offers. There'll be an icon up here. Give it a click, and I'll catch up with you all in my next updates tonight and or in the morning on Tuesday in my morning review. Take care.